Hi everyone, welcome to another Weekly Forex Forecast for the week ending November 20th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Australian dollar versus the US dollar, as well as the pound versus the New Zealand dollar, and we're going to wrap things up with the cryptocurrency VeChain or VETUSD. Markets are still pretty sideways, so I'll show you what they have to do in order to break out of that sideways action, and we'll also talk about a potential pending breakout for VeChain that could happen over the next few weeks. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and this is really the epitome of a sideways market right now. You can see where the pair has just been channeling between this 116.15 support area and also this resistance area up around 119.70. Now it looked like we were going to get a rally off of this low back here up toward 119.70, but the EURUSD never made it there. Instead we had this rotation lower. However, Thursday and Friday of last week did claw back some of those losses. So right now, it's just a question of whether or not the pair closes below 116.15 first or above this 119.70 area. My bet is on a continuation of this uptrend that we've seen here since earlier this year. So notice the uptrend back here. Right now, we just have sideways movement. So anytime you get this type of consolidation after an uptrend, it typically signals a move higher for the market. And furthermore, something I've been talking about now for some time, on the monthly time frame, the 114.50 area, as long as this area is intact on a monthly closing basis, I like the idea of a move higher. Notice too how the pair is holding above this multi-year trend line, which also lines up with that 114.50 area. So as long as 114.50 is intact, I have to stay relatively bullish the EURUSD. But again, it's all going to come down to which way the daily time frame breaks. But I do like the idea of a push higher. If the pair can get above 119.70 over the coming days, that would expose 121.50. However, my long-term target into 2021 remains that 125 area. Just remember that the pair needs to close a day above 119.70. So even if we get an intraday move above this area, that's not enough. We need a daily close above this area or below 116.15. But even if we close below 116.15, just keep in mind that this 114.50 area is not only key on the daily time frame, but it's also the confluence of support that we just looked at on the monthly time frame. So all in all, the EURUSD still looks bullish here as it continues to consolidate sideways, but it does need to take out 119.70 in order to confirm the next leg higher up toward 121.50. The pound is in a similar situation to the EURUSD, where we just have this sideways price action through here. We are trending higher, but it's pretty choppy and it's tough to trade right now. However, one thing I'm keeping an eye on is something I've mentioned a few times now. Looking at the monthly time frame, going back 20 years, this falling wedge could send the pound higher in 2021. Notice too how we're starting to pressure the top of this pattern. And if the pound continues to just hover below this level, I talked about this a few weeks ago, if we just continue to hover right below this area, that's an indication of an imminent break higher. So as of right now, if we look at the daily time frame, this is the top of that wedge pattern. Now it could be a little bit lower to include this high back here. However, if we're conservative and we place it up here, that area should come in somewhere around 133.40. Now on the other hand, support is going to be down here around 129.50. All right, so 129.50 and 133.40. Those are going to be the two levels to keep an eye on going forward. I've cleaned up my charts from previous weeks because even though there are a few horizontal levels here, the pair isn't respecting them. In my opinion, this May trend line support is the one to watch. As long as we're above that and pushing into the top of this wedge pattern, there's a good chance of a break higher. However, if we do close below this trend line, that could indicate that we have some weakness before we do break out of that larger pattern, and it could send the pound to some of these recent lows. All right, so I do think we have a breakout coming, but the pound isn't quite there yet. Just keep an eye on this monthly time frame, this pattern, because again, a falling wedge like this does hint at a move higher, and considering this is a 20-year pattern, it could send the pound much higher in 2021 if the pair does break to the upside of this pattern. The Australian dollar is holding above that 72.30 support area that I mentioned last week. So notice how a 72.30 has been a key factor over the last few months. Now, whether or not we continue to hold above this area is yet to be seen. However, if we do, keep an eye on this 74 area, which is the year-to-date high. And just like the EURUSD, I like the idea of a move higher simply because this uptrend is still intact. We had this uptrend, we had consolidation, we then broke out of this trend line. Now that doesn't mean we've broken out of the consolidation completely, because notice how we're still just moving sideways. All right, so until we clear 74, this consolidation is technically still intact. But looking at the weekly time frame, I like the idea of a push higher as long as the pair is above the 70 handle. Notice how 70 was support. Back here in 2018 and 2019, it flipped to resistance. It was resistance again here, resistance again, and support here recently. So as long as we're above this area, I like the idea of a continued push higher, taking out this high around 74 and moving even higher into 2021. Now, if that does happen, my longer term target for the Australian dollar would be up around 81. Notice how we have this double top that formed back here. So if the pair does take out 74 over the coming weeks, that could lead to a push higher as high as 81 into 2021. But looking at the daily time frame, as long as 72.30 holds as support, that 74 area is exposed. If the pair, however, closes below this 72.30 area, we could see a rotation lower back into 70.20. So keep an eye on this one. We could also have something on the intraday time frames setting up here where if the pair starts to break out of this trend line here on the 4-hour time frame, that could set something up here. It looks like we could have a potential falling wedge that's forming on the 4-hour time frame. So keep an eye on that. But all in all, 72.30 is going to be support for the week ahead, and 74 is going to be resistance. Next up, we have the pound versus the New Zealand dollar. I mentioned this last week, and in fact, I've been talking about this now for several weeks. We caught this breakdown back here when it was breaking down from an ascending channel, and our target here was this 190 area. This is actually the bottom of a long-term ascending channel. Again, we're on the weekly time frame, so this channel actually goes back to 2016, and you can see how well defined it is, particularly when you look at the monthly time frame. The pair has been in a downtrend now for the last 2 decades. So really, the idea here is pretty simple. I've been talking about a potential breakdown from this pattern simply because we had this rotation lower into this support area. We then formed a lower high off of this one. We then formed another lower high. And so all of this is an indication of an imminent breakdown for the pound versus the New Zealand dollar. However, as I mentioned last week, ideally the pair needs to close below 190.50. Notice how this horizontal level has been a key factor over the last few months. So a weekly close below 190.50 is what it's going to take to set up a move lower down here toward 182.80. Notice how that's the location of these two lows from 2018 and 2019. So pretty simple here. We need a weekly close below 190.50 in order to expose 182.80. Alternatively, if we do see the GBPNZD move higher and take out this high back here, that could be the start of a first higher high and could turn the pair higher. But as of right now, I like the idea of a break lower below 190.50 for a move down to 182.80. And last but not least, we have VeChain or VETUSD. This is a cryptocurrency that I started talking about months ago, and I was actually buying the pair through this consolidation back here right around 0.008. So we had this consolidation, we had the move higher, but ever since we topped out back here, the pair has just been consolidating now for the last few months. It does look like we've broken out of this consolidation on this candle right here, and you can see where we retested this area as new support last week. However, one thing that needs to happen here, if we look at the weekly time frame, is the pair needs to get above this area right around 0.0121. So if I draw a horizontal level on the weekly time frame, you can see where 0.0121 or so was support back here on a weekly basis. It closed below it, and then this area has served as resistance ever since. So a weekly close above this area would send VET higher, and the next key level to keep an eye on would be that 0.015 area. All right, so notice how back here it was support, and then it broke down, and then it became resistance on this candle here. Now, of course, the next level after that would be this high back here, right around 0.022. So all the key levels are really well defined here. However, as I said, we do need a weekly close above 0.0121 in order to expose 0.015. However, before I go, I do want to say that this is not a trade for me. I bought this several months ago. I've been buying on all of these dips through here, and this is about a 16-month hold for me. So I'm looking at the first half of 2022 as an exit strategy. So I will be holding this one over the next 16 months or so. This is not something where I'm looking for a 10 or 20% gain or even 100% gain. I think that VET is going to go much, much higher given the fact that cryptocurrencies have entered a new cyclical bull market. Again, that's just my opinion, but that's how I'm playing this one over the next 16 months. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.